Hey everyone, just a quick video to record today's market action. We always do a daily recap. Next week, we're going to be starting the trial service and selling memberships. The first 25 memberships are going to be highly discounted. But after that, there won't be any discounts. I paid about $25,000 for my investor education, actually about 35,000. What we're going to teach is everything I learned, and it's definitely going to help people who apply what they learn to be able to successfully invest and/or trade. I use the words interchangeably. Your time frame is different. It can be you can have a daily time frame. You could be trading intraday. I don't really do that because you get caught up too much in emotions or you can. So I trade more on, I'm a swing trader, meaning that most of my trades last 2 to 20 days. Some people are intermediate term traders, typically up to 11 months. Once you get to 12 months or longer, that's a long term trade or investment, whatever you want to call it, it's the same. I mean, we trade our money for an opportunity or we invest our money for an opportunity. So, in any event, on a daily basis, we'll be having a 3 hour session every afternoon after the market closes. We're going to review the market, look for setups. Those are stocks and or commodities or ETFs that look ready for a opportunity to place a conditional order. Also, we're going to be teaching money management, specific trading plans, technical analysis, and the whole work. So, again, it's going to be discounted for the first 25 members. We already have our first member, we haven't been aggressive in producing or starting that because I want to make sure I have everything in place and that we do it right. So it will be starting no later than Monday, and it's an opportunity to see what it is we're doing. So we will give a limited trial basis, a free trial to the morning session. That's going to last for an hour each market day. But for the real meat, for the real training, that's going to be in the afternoon. And for that, you're going to have a membership. So in any event, so we always do our top-down analysis. We do that weekly with the weekly candles. We do it daily with the 3-month chart, looking at the daily candlesticks. So right now, we're going to first of all take a look at the major indexes. The Dow Jones looks like we're seeing some pullback now. No surprise there. We had a breakout here of this level from July. We had that breakout in August, and it's gone higher, but it's gone, as we can see here, kind of slow to the upside as it should. And it's likely going to pull back. And then at that point, we're going to look for a higher low. A higher low would be something higher than this low back here from September 16th when it closed at 456.67. So when we get that pullback, we'll look for what's called a bull flag opportunity. That's a setup on something that is moving up, making higher highs, but then pulling back to higher lows. And so that's that. The NASDAQ 100 been pretty weak here since the high back in August. It's pulled back to the support area. So really on a 1 year or on a 3-month basis, it's actually up very slightly. If you look at the close here back on June 24th, it was 88.12, and today it closed at 88.44. So we're basically sideways now for 3 months, and so it's been very weak. So that's that. The NASDAQ composite, that's been on fire. As you can see, this is a tool we call the Fibonacci. I put that on the chart recently, and it hit that breakout target up there. It went close to the 161 target. That's the 24,406 level, pulled back. That was a perfect example of a bull flag setup. It went up, hit that breakout target. Now it's pulling back again. So that's good. That's what I want to see. I want to see honestly, I'd love to see a 2 to 4 week pullback. That's going to give us great opportunities, but we might not get that. It might be a 2 to 5 day pullback, or could be something in between. The Russell 2000. We can see that was a horizontal level of resistance marked by that yellow line. That's a weekly analysis that I had done at the end of last week. And so it's pulling back. And so we're going to, again, look for a pullback on that. The S&P 500 coming off record highs yesterday. bearish candle today, so we're likely to pull back, hopefully to a higher low. But if it pulls back below that, that's okay too. I'd like to see a healthy pullback so we get some better opportunities to the upside. And then volatility, we can see that that's spiking over the last few days, and relatively low, still at 1664. But if we see a rise in volatility, that corresponds to a pullback in the markets. So the indices, the Dow is down today. Yeah, the Dow closed lower than yesterday. NASDAQ 100, same thing. NASDAQ Composite, same thing. Russell 2000 closed lower. SPX, same thing. Volatility up. So all the indexes are down. Next, we look at the sectors. So the basic materials, that's not too exciting. It's been going, it's up on the 3-month basis, but still going sideways really since July. 2-month sideways trend, 2+ months. Communication stocks consolidating after these huge gains. That's a super solid sector, probably the strongest. On the 1-year basis, you can see my note there, it's up 33%. So we'll look for some opportunities. Again, I'd love to see a bigger pullback, though. So far, we're not seeing it. It's just consolidating. So that's probably the strongest sector. Energy, we had a breakout here recently in early September to a new high. And so, if we break out of that 90.68 area, then we're going to be looking at some opportunities to the upside on that. Financials, that's also closed at a new high here, a 3-month high back on September 18th. But we typically expect when that happens, we might have a 2 to 5 day pullback. And then we already have a bull flag set up from yesterday. So if you placed a conditional order, you would have got in today, but it wasn't able to break out of this high of 54.49. Today it hit 54.49 again and pulled right back. So that's still a bull flag setup. I'm not going to trade it, but if you did, you'd get in above the high of yesterday, 54.06, and you get out below the low of today, 53.63. And, that's what you would look at on that. Industrials, we can see we made a new high there back in July and then pulled back, consolidated sideways, and pretty much just going sideways right now. So not too exciting, but something we'll keep an eye on. Technology, super strong sector, just like our communication stocks. And that, that hit a new high yesterday, uptrend of 24%. So that's the second strongest sector, technology. But pulled back today, so that's a bearish candle. I wouldn't trade it to the downside. I'd just wait for a pullback to a higher low, something higher than this low of 268. And then we'll look for a bull flag entry. Staples, that's on a 3-month downtrend. These are stocks that do well or that are always going to be things people need, like food, pharmaceuticals, that type of thing, anything that people need no matter what's going on with the economy. Real estate, sideways trend right now on the 3-month basis, slightly down on the 3-month, but overall sideways, not too exciting. Utilities, when interest rates go up, utilities do well, just like financials. And so we're on the verge of a breakout of this close here of 85.70. Today closed at 85.64. So it could break out tomorrow. If it did, it's going to be have resistance in the 86 to 87.35 area. So really, until I see a breakout of these levels, I wouldn't be looking at making a trade myself, especially on utilities. That's not it's not something that interests me in terms of trading. XLV healthcare stocks, the beautiful new high close, September 11th, and pulled back on a 3-day pullback. If you would have placed a conditional order above 137.69, you would have got filled the next day. Your stop would have been below 136.53. It's gone down to 135.58. So you'd actually still be in that trade, just hasn't really followed through yet. But that's likely to, based on the way it looks, if the market pulls back, that's going to pull back too, probably. But right now, the indications are still that it is holding that support of the 30-day moving average. So initial target would be up here at 140 area. But as we can see, it closed at 136.94, so that's not a big move. So consumer discretionary, we see we hit a high up here last week, September 15th. Then it's went 1 2 days sideways, and then basically it's a 1 2 3 4 5 6 day pullback basically. And so that's typically what we use. Would look for a 2 to 5 day pullback. It can be longer, but really what we're looking for is a higher low when this ends its pullback. So we want to see something above the 32.26. And when we see that, then we look for a bullish candle, a green candle typically, where we would then place a conditional order to get in if the stock does a certain thing, moves above the high of the low candle. All right, so those are the sectors. And then next up, we do look at some commodities. Crude light, nothing exciting right now. Gold, obviously, on fire, but I do like this. I'm happy to see that, we might have a pullback. That's going to give us some opportunities to get in. Natural gas at a support level. I don't have a trading plan for a support bounce. I would look for a reversal on this. So I'd be looking at the weekly candles to signal when a reversal might come. But obviously, when it does, we're looking at a $3 position there, and we can go all the way back up here to 422. That's a 30% move on this. So at the right time, this will probably set up nicely. Silver, just like gold, huge move here. This was a perfect example of a bull flag setup. We see right here that it made a higher high here, right? And then pulled back 2 days. It gave us this nice bullish candle right there. The entry would have been above 42.25. It went all the way up to 44.77 and may pull back now. So, but that was a $2.50 move in 3 days. So, that's a 5% move. If you're using options, that might be a 50% return on your option contract. So, we're just going to wait till it pulls back, look for a new opportunity. But, ultimately, this is heading back towards the all-time highs at 50. If we go to the weekly candles and we put this on a 20-year, you can see we're off the charts here. So, that tells us that the central banks, large institutional investors are putting money into silver and gold because that's a hedge against inflation. And, it's a asset that you can trade it based on the exchange traded fund. And the ETF or exchange traded fund is a closed end mutual fund. So you can trade it. But really, ultimately, probably what you want to do is have a percentage of your assets in the actual physical gold and silver. And so we'll likely be setting up a relationship with one of the best broker dealers for that so that you can have some hard assets, physical assets. That's important. The next chart is the 10-year Treasury note. We see interest rates have been going up. The high over here back on this week was 113.105. This week we went to 111.310, so it's actually a breakout. So, it looks like short-term rates are going to continue to go higher or down, I should say. These are the bond prices going up, but the interest rates are coming down. So, obviously, the Fed, did a small cut, I believe, earlier in the week or last week. I'm sorry, and there are some projected cuts over the rest of this year, 1 or 2 cuts this year, possibly, and a few more next year. So. And then we have the dollar, that's obviously at some lows, but eventually that's going to reverse and give some opportunities there as well. Then we look at the Magnificent Seven. These are the 7 largest NASDAQ stocks. So we have Apple. That's a beautiful setup right now. That's a breakout setup. The close over here on the 23rd, January 23rd, 2024 was 255.59. Today, 244.43 close. So this is a long-term setup. We'll just go ahead and kind of map this out right now. I'm going to change this time frame down to 2 years. Okay, and so the entry on this we would look at from a long-term trade. Long-term meaning, long-term meaning, that the last time it hit this high was back in December, and we're in September. That's a 9-month deal. So, the 9-month target on this would be 337 on Apple. We're at 254, so that's a huge move. It might take 9 months or 12 months to get there, or it could make it there in 2, 3, 4 months. Anything is possible. So the key is there we would put in a conditional order that if it does go above the high of this candle, probably 260.10, we might get in then. You could get in earlier, but you would want to maybe see it clear that and then shoot for a target at 305. We know we're always going to have resistance at round numbers, so 300 is probably going to come into play. But again, I'm not a long-term trader. I'm a swing trader, so I'm looking at the 3-month time frame. So in any event, if we go back to the daily candles and then we look at the 3-month time frame, what we're looking at here is just for a pullback to a higher low, and then we get in on a bull flag, and we're going to have some nice targets. So I'm going to take this off, but that would be the long-term setup we looked at. But we can see here if we go back and use that same tool, it's called the Fibonacci retracement tool. We could just measure from the high up here to the low there, and we can see that it not only did it just go right through that 161 extension. That was a super strong breakout. So we could have looked at that and, determined whether or not it broke through on a lot of volume. And it did, obviously. And then also it just went straight to that 200% target, the breakout target. In 2 days, you would have just made a ton of money on that. I mean, from 240 to 250, that's a 15-point move. 15 divided by 240 is about 8% or something like that. 15 point divided by 240, it's something other than that. Let me see here. Just going off the top of my head. So 15 divided by 240, that was a 6.25% move. And if you had the options, that might be a 60% return. I'm saying off the top of my head, a 10 times return. Certainly you can buy the stock, but it's a lot more capital that is required. And, I prefer the options, because it's a much more efficient way of using your capital. It gives you the right to buy the stock, but you don't have to. The main thing is you have to have the right, when you buy an option contract, you want to buy enough time so that it has time to reach your target. The closer the option contracts get to expiration, the sooner they lose their, or the faster that the extrinsic value you lose. We'll go into detail when we talk about options. But anyways, I'm looking for a pullback. I'd love to see it come to 240, but based on how strong this move was, unless we have a major market pullback, it's likely to pull back to something like 250, maybe a little bit lower, and then give us a nice entry. And from there, we can, have a nice target again to the upside. So that's a super strong stock. Amazon, obviously, a new high close here back in September 9th, but pulled back, tried to go higher, and that failed. That bull flag setup would have failed. You would have got in, and then it failed to move back to the breakout target, let alone higher. And the stop you would have been stopped out below 226. You would have got in above 231. So, you would have had a 5-point risk. You would have been out, and so that trade didn't work out, but there will be new opportunities. Google, super strong stock, as we can see. It's made a new high recently here. Closed up here at 255.24, a couple days sideways. So it's just consolidating gains. That's super strong. But I mean, at this point, for me, it's just chasing it. So I want to see a pullback before I buy that. Facebook, that's this high over here from September 16 wasn't able to meet where it was on the August high. So, it's weak. It's not weak per se. It's on a 3-month uptrend. If you look at the close here back 3 months ago to today's close, it's up. But relatively speaking, it's going sideways now at best. And so, again, I would look at this on the weekly candle for the next opportunity. And, we know that it might come back here and test this breakout of 740 area. And if it does, we'll get another setup, another opportunity. But, there's some upsides. Not a big fan of Facebook necessarily for a number of reasons. But anyways, that's that. Microsoft, we see we made a new high close over here, 524. Then it pulled back a 1, 2, 3, 4, 5-day pullback, gave us a bull flag setup. Would have got filled. It's not followed through yet, and it's a little weakness today. But if the market goes up tomorrow, it's going to go up as well, likely. But if the overall market pulls back, we can expect this will too. 70% of the stocks go with the direction of the market. NVIDIA, super strong stock. just consolidating after this high on August 4th. This again is a weekly, so let me go back to the daily. Okay, so on the daily and the 3-month chart, let's see what we have here. Okay, so we have a new high close yesterday, super solid, but I was not able to follow through, showed some weakness today. But, again, I would get in above, if I was going to do something, I would get in above 184.48, and then look for a breakout target on this. So we can look at this. This is a pretty nice setup. Go back to the Fibonacci again. And by the way, this service is not recommending any specific investments. We're not investment advisors. We're not broker dealers. We're just educating people on how to trade, and we will show some. We'll place some paper trades likely, but we don't give investment advice. So in any event, if it does break out of these area, this 184-ish area, 185. First target 197, 200 is going to be a resistance level, but then the breakout target 205, and so the time frame on that was it started August 12th. Today is September 22nd, so that's 40 days. So our target on the upside to reach the breakout target might be 6 weeks or so. So if I was looking at buying an option on that and I want to trade that full target, I would buy like a 2-month option. That gives me enough time. And we would set, specific profit targets and break-even points, and we would adjust our stops as we go. Tesla, beautiful new high yesterday, but today's a pullback day, so I'd love to see this pullback, to make a higher low, which would be really probably above this low down here. But ultimately, this big green candle, that would be a support area of 370. So I'd love to see it pull back to 370. And then get another bull flag set up. So we're going to keep our eye on that. That is pretty much it. We went through the commodities already. These are some ETFs we can trade, but that's pretty much the market wrap today. We do a report, also a printed report, so I'll post that later today. And then, like I said, just stay tuned for the trial offer. It is coming. You'll be able to do the morning sessions, for free. But the afternoon sessions are going to require a membership. And again, if you look at, I'll say the competition, but honestly, they're not the competition because I don't think they add the type of value we're going to with our education. We're going to teach everything from A to Z. It's a PhD investor education. I paid for it after getting out of financial services. I had the Series 7, 63, 65, and 24. Honestly, that didn't do much except for allow me to sell products. I could put people into stocks, bonds, mutual funds, annuities, and so forth. But honestly, I did what I was taught, and I told people it's okay when the market crashes. Don't worry, just use dollar cost averaging or use diversification and asset allocation, and you'll be all good. And for the most part, it's true. You might be eventually, but I mean, honestly, makes no sense whatsoever to just leave your money totally exposed and lose half of it when the market drops 50%. So with that said, if you're in a retirement account and you don't just necessarily want to sell it, that can incur taxes and also penalties if you're under 59 and a half. But what you can do is hedge yourself. That's what smart money does. You use derivatives like options to hedge that portfolio. So if your portfolio goes down, let's say from $1 million down to 800,000, you might get 100,000 of that back using option contracts, where you buy the puts on the market so that if it does pull back, you make money there while you lose it in your portfolio. And it's a way to minimize your losses. And so, and a lot of people are afraid. A lot of people don't understand options. And so when you buy an option, if you're a buyer, the most you can lose is what you paid for it. So, there is a determined amount of risk. Now, if you're trading futures, you're going to have unlimited risk. And so those are going to be a lot more risky. But if you know what you're doing, you can use those as well. But I would never carry futures myself until I learn more on an overnight basis. But option contracts are are really nice tools to use, and you can also be a seller of options and collect premium, and that's a good strategy as well. Your returns might not be as high as they are on a directional strategy, but you still make some nice returns, much better than you would just by buying and selling stock. And so, stock is very capital intensive. If you want to buy 100 shares at 1,000 a share, that's $100,000. You might be able to buy an option contract for $1,000 and control that same 100 shares of stock. And so you get leverage with that. It's the same thing when you buy real estate. You can pay it in cash, or you can take out a loan and leverage that asset, and that's what options allows you to do. It allows you to leverage opportunities in the capital markets. So, in any event, hopefully this is helpful. If you like this content, share it, subscribe to our channel, like it, make comments, and stay tuned for that offer. It's going to be coming out, like I said. I'm a little bit behind on that, but it will be out very quickly within, I would say for sure within probably by the end of business tomorrow, but no later than on Thursday. Okay. And then also, if you're interested in learning more about Tasty Trade and Tasty Live, that's my preferred brokerage firm. I know Tom Sosnoff met him back in 2010, and JJ Kinahan, managing director of IG Global, which purchased Tasty Trade. Last year. And, those are people who understand the business very, very well. And what I like about Tasty Trade is not only do they have a great platform that's highly regarded, but in addition, they have Tasty Live and Tasty Crypto. And Tasty Live gives you access to live education every single day during, Monday through Friday while the market's open, and even before the market and after the close. So you can really learn from experts on how to be more successful in trading. And in addition, Tasty Live website has free educational courses. So to me, it's a no-brainer to go with Tasty Trade. If you want some more information on that and use my referral code, they'll pay me a referral. You can go directly through them. But if you're interested in opening an account, I highly recommend it. Speak to me on that. I'll educate you on exactly how to get up to speed quickly. They have a lot of good resources, and I'm teaching people on how to plug into those things very quickly. And then also there's live events with Tasty Live. And so, and there's an opportunity likely as we move forward to have private meetings with Tom Sosnoff, the founder of Tasty Trade and Tasty Live, and just a down-to-earth businessman who understands the money business like no one else I've ever met. And, he started in the S&P 500 trading pits, and he's done it all. And his first company he built was Thinkorswim, sold that off in 2007. That was a brokerage platform, and now he has Tasty Trade. And it's a great platform, highly rated. And, he has a world-class business. They believe in adding massive value, and that's what that Tasty Live is about, and they give excellent service. So in any event, enough said. I pray for blessings over you. Look forward to connecting with as many of you as possible as we move forward. Thank you.